This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the datasets, the earnings, and doing a small technical analysis over the SPY/tech, and I'll be discussing market breadth overall, so it won't be super in detail, but we will just be touching base on a lot of different sectors very quickly. And that's for February 4th, 2026. And with that said, let's go ahead and jump straight into the data. Now for Tuesday, February 3rd, we were supposed to have the JOLTS job openings. Now, I wasn't sure if this is the employment data I was talking about in last night's video, where I had a mention in my group that one of the major employment data sets would not be coming out this week. Um, with it not coming out on the scheduled time today, that's making me think that it's very likely this JOLTS job opening data, especially since it's saying the December data set. We'll see. I don't think that's coming out at 9 a.m. tomorrow, but I could be wrong. Um, I know that when some of the datasets do adjust on here, sometimes they adjust incorrectly. So just take it with a grain of salt. I'm not sure if tomorrow we're getting the JOLTS job openings or not. But with that said, um, Tuesday we had a pretty relaxed day for data. We had Fed member Bowman speaking, and yeah, that's pretty much it. We had the crude oil stock. No one cares about that too much right now. For tomorrow, Wednesday, February 4th, we have the ADP non-farm employment change for January. The forecast is expecting a very slight increase, but again, remember this needs to be a lot closer to about 150, or excuse me, 180 to 250-ish thousand jobs rather than the 46,000 that they're expecting. Truly, I anticipate slightly less than that. I expect it to be a lot closer to this 41,000 that we previously had. Um, Going through a lot of the weekly ADP employment change, we see that they have been mostly negative or very slightly above positive. So that has not been a good thing at all. This is not a good number. Even if this jumped up towards, say, 80,000, that would still be showing weakness in the labor market. Not going to discuss the JOLTS data because I'm not sure if it's coming out tomorrow. Now we have the ISM non-manufacturing side of the data. Now again, we had the manufacturing side on Monday. It did come in slightly hotter, but overall it wasn't anything too crazy. So we should really be anticipating pretty much the same type of result coming from these non-manufacturing side as well. Now, I am very interested in the non-manufacturing employment change because that's a very crucial number. Um, I do think that's going to be lower, but again, I'm open to being wrong. So we will see. Other than that, not a whole lot of data tomorrow, and not a whole lot of data for Thursday. The big day is going to be Friday. It was supposed to be Tuesday, but we did not have the JOLTS job openings, so it was not a very big data day at all. With that said, really the next 2 days are pretty relaxed. Unless we get the JOLTS job openings tomorrow, then I would not expect anything too absurd. Again, the big day is Friday. Now for the earnings, we had AMD today. Now, I'm a little mixed on it because apparently the revenue and EPS did fairly well. I'm just assuming, and what I've been told is that it just was fairly close to what the last revenue was supposed to be at or something like that. So it just wasn't enough of a beat that the market basically didn't accept the results as quality as a double beat should be. So AMD had a little bit of a sell-off. It's currently down over 7% right now. I haven't looked at the AMD chart in total, but just based off of the earnings and glancing through the actual earnings call and the guidance and everything, it really looks fine. Now, unless there's some technical reason that there should be a mass sell-off, then from the actual perspective of going over the actual EPS, the guidance, everything else, AMD looks great. It's still, again, this is still a mini Nvidia. You can't count on it. Count. I can't talk. You can't count it out. So, yeah, that's enough glazing. AMD. We had SMCI, Chipotle. I did not get to read Chipotle. I'll read that tonight later. Again, Chipotle will tell a lot of the, front-facing consumers, whether we're seeing weakness within the consumer market or not. Now, for Wednesday, tomorrow, we have very big earnings. We have Google, we have Qualcomm, we have ARM, we have Elf Beauty, we have Snap, all sorts of different names. Again, really the main ones I'm looking at are Google and Qualcomm, as they are the primary ones that are going to push or pull at the market. Um, as for ARM, again, I'm not super concerned. I think that they're the type of company that can miss an earning or beat an earning, and it's not going to, um, push or pull the overall tech too much, unlike AMD. Now, if this AMD dip gets bought up, which I actually think it might, um, this could end up being a very strong buy if the sell-off was just um, people selling off due to an overestimation of what they expected the results to come in at or something like that. So I don't know the whole story. I will look more into it, but yeah, that's what I got going on for the earnings. Tomorrow's going to be a very crucial day for the earnings. Google's a big company. It's very important. So we will stay tuned into, what happens with that.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
All right, and getting into today's technical analysis, as always, let's ensure the daily time frame is turned on and our moving averages and Bollinger Bands so we can quickly get into this. Now, again, this is going to be done fairly quickly tonight. I've been having an extremely busy week. I'm still trying to finish getting my office set up for the streams come next week, so sorry if I sound out of breath and everything. I've just been doing a ton of work for that. So with that said, let's go ahead and jump straight into this. Now, we had a bit of a selling day. We talked about how today could be a very large potential of a downward 5 mod test. Now, obviously we got that and a lot more. Um, Today's selling was very large, okay? And just going to the hourly, I'm going to turn off Bollingers and moving averages for a moment, but I'll explain, we'll go back to that in just a second here. Now, the reason why I think that this is so large, and we're going to go over the drawings, is because one, we've been kind of talking about that this can turn into a large inverse head and shoulders. Probably for the last, what, 3 or 4 trading days now, um, that this can turn into a large inverse head and shoulders, and that we were looking for the head potentially formed here. And from that, we were looking for a right shoulder. Now, there's a lot of things here that make a lot of sense for this right shoulder. One is that not only does it line up with the left shoulder almost perfectly, I mean, it's off by about, see, I'm sorry, I'm trying to get the sense correctly. So that right shoulder, if this is the right shoulder, it's off by about $1, so just $1 deeper. But I want you to see exactly what range this is digging into. This is digging into this very crucial yellow liquidity channel that we've been tracking for a very long time now. And every time it's hit that range, it has rejected upward. Okay. So pull down, reject, pull down deeper. So a lower low. This is, by all technical standards, a bearish thing. It's a lower low. We pull out of that lower low, not just with buying, but completely closing this entire gap of the selling to finish out this structure. Um, Again, by all technical standards, this is a fair value gap. If you were to cut this out of the market right here, and I'll make it like a light blue or something so it's a lot easier to see. But if you were to just cut that out of the market right there, this would be a straight line. Okay, so this was a fair value gap. Now, what I'm trying to really decipher is if, excuse me, this is a continuation of this structure, or if this is trying to build a new structure here. It's hard to say because, again, all technical standards, we have a cup and handle here. Now, it does look a lot deep, or, it does look pretty deep for this handle. Um, I won't lie, it's an extremely deep handle. However, by cup and handle standards, we have exactly what we're looking for. We have the bearish structure at the top, potentially bullish structure at the bottom, and I will make this orange just so it's a little easier to see. And from that bullish structure, potentially a bounce upward. Okay, and that bounce upward, if we have the full bounce upward, if we clear this consolidation channel top, then this is very, very likely, once again, going to take us right back up to where its previous all-time high was, because this is the range it's trying to break through. Now, that looks like very, very good bullish structure to me. It's an extremely large handle, I won't deny that. Um, but it does look good. Now, there's a couple other bullish things I'm going to get into, but the one thing that I think I'm the most concerned about right now is that if this is a bearish structure and we're just mis, you know, understanding it here. Now, many people are probably looking at this as an inverse cup. And let me go ahead and make that purple. Sorry, there's a lot of different colors and everything going on here. I apologize. And that this would be the handle on that inverse cup. However, um, something you can notice if we make a trend line here, and again, I apologize, there's so many different lines on here, is that this is moving upward. Okay, and we're going to make this just white so it's super easily visible, but this is just moving upward. Each one of these cells isn't breaking new ground. It's not really taking us to new territory. It's not even breaking the previous low that, I'd be looking for to really have broken for the structure to completely be invalidated. Um, Again, we have this very large bullish cup. From that bullish cup, we've been looking for a handle upward. Now, many were probably expecting this cup to turn into a smaller handle and break out, me included. I'm not gonna lie about that. I expected it to basically hit the lower bounds of the 5 mile, bounce off of this upper uh, consolidation channel range, and then start heading upward to create a really nice, clean cup and handle. But that's not what we're getting here. We're getting something that's digging for a lot more liquidity, which can both be a very, very bullish thing, or it can be a major concern. Because if the top is tapering out, then potentially that's why we're seeing the selling. However, with this, and I'm going to delete some of these structures here for a second just so that this is a little easily seen. But with this inverse head and shoulders being here, I'm just going to circle that for a second. This completes the handle on this cup. Um, if we continue and head upward, if we break this range like I mentioned, if we once again head above the 5 mile, 10 mile, 20 mile, then we will be heading towards that all-time high because the only structure from here upward really is completing that cup to the upside. It's this micro cup right here. Complete that to the upside. Look for a smaller handle and a breakout. Now, one of the main concerns I was looking at from the bearish perspective was that previously, and I'm going to go to the 4-hour time frame here, is that previously these higher highs in this range were no longer reaching higher highs. They were starting to taper downward. However, once we started pushing above this upper consolidation channel again and actually reaching all-time highs and seeing bullish liquidity and structure to push into those all-time highs, potentially even further, it looks very, very good. It doesn't look tapered out to me. Um, we also had a lower Bollinger rejection on spine QQQ, which I'll show in just a second, but that's also a very, very bullish signal to the upside. Um, but we see some good bullish structure here. We saw a very, very bearish structure here, which is this head and shoulders. I will mark this in blue so that it is easier to see, hopefully. And from that head and shoulders, we got this candle down towards the 682, whatever it was. I want to say it was almost 682 exactly. I think it was 681.99. Um, but from that candle downward, I have not been seeing further bearish structure building in here. Another signal that I want to look or show you before we look at the actual moving averages and Bollingers, which is funny because we'll close this video on what I usually started on. Um, let's take a look at the VIX and the VVIX. So with the VIX, and this is the daily time frame. Sorry, my daughter ran in here. With the VIX, is that one of the main things still hold true even today is that we're still below this $20 range. Um, with today, we saw the high of 2037. And can this be creating bullish structure for the VIX? Absolutely. Um, Structure is not really something I focus on within the VIX as much because the VIX does not have an equity side to it. You cannot buy VIX shares. So that's something to just take to account is that this is entirely derivative driven, meaning it tracks the options, whereas the VVIX is tracking the futures derivatives for the insurance. So you can have structure form within these these volatility ETFs and future instruments, but it's not something I entirely look for. But I'm not going to dismiss structure being found either. Because I know many people are saying that, oh, well, there's this structure here, there's this structure. I 100% agree with you guys. I don't think you're wrong. It's just not something that I personally look for. I feel that the VIX is sort of like, how do I say this? It's almost like trying to do technical analysis on say a times two ETF, like say TQQQ. Um, for me personally, I would do the technical analysis on the actual QQQ and then use that technical analysis to determine levels and everything on the QQQ or SQQQ, right? With the VIX, since it is really tracking the derivatives behind the SPACs, um, generally I would want to be following the SPACs TA in terms of where this is headed. Now, I do agree there is absolutely some bullish structures in here. We are within the danger zone, which is this red area. Anytime the VVIX is above 98, it is a major concern because that does mean that that big money is putting actual large money into insurance on their SPACs vehicles. So we can never underestimate the VVIX being above 98. Okay. Doesn't really matter how bullish I am or anything. If the VVIX is elevated, the market can absolutely start selling off. And I do think that's a little bit of what we saw today. We saw a little bit of volatility popping through. Now, granted, I did not get to watch the actual trading session today. I was busy working on the office and everything. But um so far, to me, it looks like This was a nice volatility pop um, from this previous volatility pop that we did have. And, potentially can we see continuation of this? Absolutely. But we're still within this weekend range. Okay, we're still within this very, very weak range. And for me, I'm not seeing the massive, massive pops yet. Usually, when I'm looking for a major sell off to occur, is when I'm seeing the actual VIX itself starting to push like that 24, 25 plus range, because that's really telling you that people are going above that cautionary bearish trend range to really start hedging the investment. So that's how I view it at currently. But with that said, um, let's go ahead and take a look at the moving averages and Bollinger Bands for SPY. Now, with SPY selling down, and again, I've kind of given my thesis on why I think this could still be potentially very bullish. Um, just remember that with the sorry, my daughter's laughing, it's throwing me off. With the close being at 689.53 today, that will be pulling the 5 mod downward. Now, I don't have the exact number of where that's going to be pulling it downward, but from my best guesstimation, it's going to be around the 691.80 range. It can be lower than that, it can be higher than that, which means that if it's higher, then very, very likely we're going to see the market try to aim upward for that range, unless we're just seeing a full-on sell-off starting to occur. And then we will see the 5 mob being a resistance against the price, meaning that we'll be pushing up against that 5 mob, rejecting, pushing up, rejecting, and that's how you build a really solid downtrend. Um, Not seeing that just yet. It can occur. And with the 10 mile and 20 mile still being very, very close together, I mean, technically, this is still pretty much consolidated. Even though the 10 mile has finally pulled above the 20 mile finally, it's taken some time, but we have seen that cross. If we have a large bounce from here, then we're going to see that happen even faster. We're going to see the 5 mile pull back upward. We're going to see the 10 mile continue pulling upward and the 20 mile continue pulling upward, which will expand the Bollingers. Right now, we're seeing things very, very just consolidated. We're seeing the upper Bollinger slowly pulling downward. Not really. I mean, it's been sitting at this 99.40 plus range almost all week. So yes and no. Um, that can change really quickly. But we've been seeing the lower Bollinger especially pulling upward, which is really telling us that our room here is closing in on us. Eventually, if we continue to stay at this consolidation range with the 10 mile, 20 mile, and the 5 mile, then we're going to see the upper Bollinger start pulling downward into it, and we're going to see the lower Bollinger start pulling upward into it, and that room will basically continue to shrink and shrink and shrink until a very, very large move happens. Um, the larger you have of a consolidation, generally the larger the move is. So here's something that I want everyone to kind of be aware of. And that with the consolidation really starting to tighten up, it really creates these ranges where we can have very, very large moves. And I know I just kind of said that, but I want to show you that. Um, Here's where we're at right now. Here's kind of one of those moves, only except we're seeing a lot tighter in the current conditions. From that range, and this consolidation happened for almost the whole month of October. So just be aware of that. This was a very, very tight consolidation. Um, when we were trading that, it was very, very frustrating for people because we were basically just sitting at that 20 mile and we have not entered the 20 mile range for a very long time. Many people thought that this is where the market was going to absolutely start breaking down, but from there we saw a reprieve and an all-time high, and that opened the upper Bollinger, opened the lower Bollinger, and then we had again more movement from there. I want to see if I can show another one or two of these ranges. Here is a pretty similar area. Um, almost exactly to what we had before. And this is again last February when the previous sell-off really occurred, and that was on, really on 220 to 21. That's when that occurred. Now, with that said, back when we were trading this, many of us started to become really bullish in here, even though we were concerned with this range above the 5 mile and below the upper Bollinger. But many of us were very bullish here. It looked like this was a cup with a handle and getting ready to break out. And all of a sudden we have, a massive, massive, massive sell off. So yes, consolidation can create absolutely huge moves both to the upside and downside. As you can see this consolidation here. Now this is consolidation above the 20 mile, so it is slightly different. This is starting to look a lot more bullish here than what we're even seeing currently. But we're starting to see the bullish uptrend again, and then all of a sudden collapse. Okay. Um, Let me see if I could find one more range that is very close to this one. That's similar, but not really similar enough. I want to say here, right there is very similar, where kind of see what I'm talking about, how the Bollingers are collapsing, are, pulling into each other. You're seeing the lower Bollinger pulling upward. You're seeing the upper Bollinger pulling downward. You're seeing the price action being right within the 20 mile range. Basically for, geez, almost a whole month, it traded almost right at the 20 mile exactly. You had a little bit of an upper Bollinger rejection here, and then a lower Bollinger rejection there, but it was glued to the 20 mile. However, from that consolidation range, you did have a move upward, a little bit of a downside test again, so pulling back towards that consolidation once again. However, you did have the break upward. And if I remember correctly, this is actually when the major rally started. So yeah, that's a perfect range to talk about. This is when the banking collapse happened. That's or okay. So yeah, as you can see, there there's a lot of large opportunities that can be really taken from these really tight consolidation ranges. However, you just have to really be prepared for anything that can happen here. Again, things can look very bearish and can turn very bullish. Things can look very bullish and can turn very bearish, as you saw in both the last two examples, how the bearish trend turned into an all-time high, and the bullish trend in 2025 um, turned into, a super low. So just be aware of that. Uh, as I've been talking about, straddling at the 20 mile is one of the smartest things you can do here, because if you get enough time within your straddle, you're going to either hit all-time highs or you're going to see this thing crash. And by crash, I don't mean a massive, massive minus 20% crash. I'm just. Selling. Um, so yeah, that's kind of my opinion on things right now, which I know it doesn't help a lot. Again, I'm still bullish overall. The ADL has been fairly strong. Um, yes, today was a little bit of a selling day. However, we did have a lower Bollinger rejection. This can still turn into a lower Bollinger move if the market goes to claim, that further downside. If this is going to be some inverse cup, then obviously, this can push a lot further. However, based on the overnight, based on some other signals I'm going to show in just a second, I don't think that's the case just yet. And again, that can change very quickly. As I said, this week was very likely the week for that change to happen. So, and here's some of the reasons why. So, with the, major selling in AMD in the overnight, we would assume semiconductors would be, you know, somewhat dumping, and they're really not. The overnight is currently at 344.13, and really, that's above where the 20 mile is. So was this just that 20 mile test I was talking about that could occur? Um, very, very likely. I do think this is very likely that this is just a 20 mile test. Um, I know when I was observing the flows on the bear ETF for semiconductors success yesterday, it was absolutely flying in terms of people selling shares off. Don't really know more to say about that. Um, again, those shares could always be bought back, so take that with a grain of salt. But the VIX is under 20. I can pull up the VIX. I'm blind. I apologize. The VIX is under 20. We did talk about how potentially this can be making some bearish structures. However, again, I'm still um, you know, bearish on the VIX. Now, I did not get to open my short position, which honestly, thank God. However, I still want to open a short position on this sucker. And that's for UVXY. I was looking at, I believe, either the March or June expiration. I still want to get a put on that. I many people are calling me silly for that, but I think that it can be an extremely, extremely, extremely strong position. Even today, we're seeing the ADL dropping, um, which that's a very, very good signal for me. We're seeing the ADL dropping, good signal within the HIG, the high yield corporate bond ETF. We had a little bit of selling today, but still the ADL is flying upward. Not a lot of selling. The level held pretty much throughout the entire day. So even though we did have, quote unquote, sell off, it's still showing within the high yield credit market that they basically bought that dip up. Within Bitcoin, we have been seeing a little bit of buying within this range. Now, I started entering some Bitcoin based stuff at the 74.8 um mark. It did drop down to the 72.9. I wish I could have loaded that dip. However, I missed it. With that said, I am still anticipating Bitcoin to see some upside. And one of the reasons why is even though we're seeing some upside in the DXY, I do still anticipate the dollar, the DXY to start pulling downward. We're seeing the yields. Let's check the yields really quick. I want to check the 10-year. We're still seeing a little bit of this stickiness within the 10-year. It did pull up today a little bit, but it's still um it's elevated, but it's not within a super super concerning range. For example, when we were back in the beginning of 2025, when President Trump got elected, we saw the 10-year pull all the way up to the 4.763. Now it did start pulling downward at that point, but when we started getting the real sell-off occurring, the 10-year started or the 10-year yields started to pull downward. Because generally a sell-off is a risk. Treasuries price in risk. If we're going to have a sell-off within the overall market, yes, it can create higher yields, but overall, from those higher yields, they will pull downward because that's how the treasury market hedges things. Um, if there's going to be risk within um, the yields on the or TLT will see buying, actual bonds will see buying, and just a couple other things I want to take a look at. There's the RSP, which is basically the equal weight S&P. Um, Even with today's selling, it looks very very strong still. Um, it's going to be above the 20 mile on it. It's not coming from some upper Bollinger move. It's not trying to aim for the lower Bollinger. We could very, very likely see the same thing within the QQQ equal weight, if I can pull it up. Sorry, I'm very blind. Just one moment. QQQ equal weight did have a little bit of a lower Bollinger move today, so technically this can actually become pretty bullish. I actually like that. That might be something I might try to pick up a little bit tomorrow. With that day one lower Bollinger move, we can anticipate a day two lower Bollinger move. However, day two lower Bollinger moves become one of the best opportunities to buy because that's when all the buying will start returning, and a lot of this selling weight very, very likely will be picked back up. We see the 5 mile at 140. Yeah, it'll pull down a little bit, but not a whole ton. Starting a little bit of a bearish trend in here, but nothing that can't be pulled out of very quickly. It's actually been in a slightly bearish trend for a while now, so that can be a little bit of an indicator that, potentially we are going to be seeing selling. Even within the QQQ equal weight, we saw the handle downward today actually take us below the 200 MOF uh, for a small period of time. So again, that's a whole nother signal in itself. The last time we were at the 200 mile on the QQQ equal weight was back when the selling last year happened in February. So keep that in mind. Probably going to take a look at gold and silver really quick and with that. Now with gold, we talked about how very likely this 20 mile dip would be bought up. We did enter the 20 mile very, very lightly. Talked about how if this 20 mod dip was not bought up, that we would be looking for that lower Bollinger move. However, again, we are seeing the 20 mod seeing support bought up so far. I think throughout all the precious metals, we're seeing it throughout silver. Very, very good support building here. Doesn't look like it so far, but this next level is heading back up to that 5 mile range, and from the 5 mile range, seeing a little bit of consolidation before very, very likely pushing back up to all-time highs. And we will cap this off with the USD JPY. Again, we did see a little bit of selling. I don't want to say selling. We did see a little bit of unwinding of the whole carry trade, um, starting to occur a little bit throughout the last few weeks. Um, This is still very elevated though. Like, okay, this needs to be a lot closer to about 130. Um, this being above the 148 range is still putting this in the very, very dangerous range. And if this is going to cause further unwinding, through the Bank of Japan having to sell securities to buy more yen to strengthen the price, then we will be seeing further selling within equities. So keeping your eye on the USD JPY or the FXY, that's the yen ETF, then that's going to help you quite a bit because if this starts dropping very, very drastically, it's very likely we're seeing unwinding. If this starts pulling up too much, then that's saying that they're very likely going to have to unwind. So just keep your eye on it. It has a massive implication on the overall market right now. So yeah, I'll stop rambling. I'm seeing a lot of concerns with the market, but again, I do see a lot of reasons to be bullish. Now, I know many want me to cover oil. I'm not going to do that tonight. I want to do that in a longer video, and I still need to discuss treasuries. I'm not going to discuss that tonight. I will very likely discuss that in its own video, or maybe make a oil slash treasury video tomorrow or something. So yeah, with that said, I hope everyone has a great night. Again, I'm still bullish on the market overall. I know that there's a lot of concern. I do see it. I do think that it can definitely turn fairly bearish fairly quickly. These really tight consolidation ranges can do that. However, it can inversely also turn very, very bullish very quickly. Um, with all the bullish structure I've been seeing and with it, some of the bullish um things we've been observing in some of the other symbols and markets and everything, I do think we are getting ready to have that leg upward. So I'll end it here. Have a great day. Everybody trade safe, and I will talk to you in tomorrow's video. Again, I'm going to be starting to stream next week, so I hope everyone is looking forward to that. I look forward to seeing you all there. And thank you all for supporting me, for liking my videos, for sharing, commenting. I always appreciate each and every one of you. So with that said, take care, and I'll talk to you in tomorrow's video.